Are you ready to follow a proven trading strategy? Do you want to own the strongest index, hottest sectors, and bond ETFs only when they provide an opportunity for growth? Now you can with the Total ETF Portfolio Trade Alert newsletter. Follow our long-term investment positions, active index and bond trades, and own the hottest sector ETFs during stock market rallies. Visit www.thetechnicaltraders.com to learn more. Welcome to the Technical Traders Podcast, the show that brings you technically proven strategies and trade ideas from experts around the world. We're going to help you make more money with less risk so you can take your trading to the next level. Now, here's your host, Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR Newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Mark, welcome to the Technical Traders Podcast.
Glad to be here. I'm really excited about it.
Mark, can you tell us a bit about yourself and what VRTrader.com does?
Okay, well, I was just an average guy in Miami, Florida, going to college and doing my own thing. And I made friends with a fellow who just happened to have an uncle who ran a commodity trading firm up in Chicago. This is way back in the 1970s, and he said, Mark, what do you know about the stock market? And I said, well, seems interesting. I don't know a lot about it, but I like to learn. He says, well, what if I took you to Chicago, and there's this new exchange being created called the Chicago Board Options Exchange. There's never been an options exchange before, so I'm dating myself. This is back in 1973. He says, well, we could train you how to trade options, get on the floor of this new exchange, to just teach you how to be a floor trader, or they call them a market maker. And, I sort of said, gee, that's exciting. Can you make a lot of money doing that? And he says, well, it depends how well you trade and whether you're a floor broker or whether you're actually an individual market maker for your own account and so forth. So crazy me, I jumped on a plane to Chicago with my friend, and I decided to take a floor exam and learn a little bit about, the floor and how to trade. Is all electronic, even back then, except there were only call options at the time, not put options. For those that are unfamiliar with the option market, calls are betting on stocks going up and puts are betting on stocks going down. And that's so how I entered the business, so to speak. It's like, it's sort of a well-kept secret in a way. I mean, everybody that I've talked to in years since said, gee, I want to be in the stock market as a professional, and how do I get into the business? And the general procedure is, you apply to one of the big brokerage firms, without mentioning names, all the popular names that are out there that you see advertising, and you try to become a trainee, or eventually they get you assigned as a registered representative of the brokerage firm. So, let's use a big name like a Merrill Lynch or something that everybody knows. So, they scrutinize you. They may or may not accept you. Then you have to take all these, exams, these security exams. And then you can start calling people and be a retail broker and try to drum up business and make a commission for yourself or aggregate assets and somebody else manages it. But, it's a long, drawn-out process. Not everybody gets into it. And it's sort of funny because by the offer that I got, it jump-started all that. In other words, it's like a well-kept secret. Nobody even thinks, if I want to get into the business, maybe I should just go to the floor of the exchange. Forget this retail broker stuff. Why don't I just go right to the floor of the New York Stock Exchange or the TSX floor and trade in the pits? Of course, we're talking now 2022, and a lot of the physical pits aren't what they were back in the 1970s. We have hundreds of people on the floor screaming at each other, even though there was electronic executions of some transactions after they were made, but usually it was done through verbal, hand signals and verbal outcries and so forth. So it's sort of a well-kept secret that, you can just fly up to Chicago, or it's, even New York Stock Exchange or Philadelphia Exchange or other places. There's, the other exchanges out there, the Board of Trade, for example, or the Mercantile Exchange, a lot of exchanges. And say, I want to become a member of the exchange. And generally they just say, okay, take the floor exam, get a clearing firm to, back you on your trades. But you have to put up a little bit of money. Back then it was like $10,000, and you're in business. You become like a floor trader right on the exchange, and so you're bypassing the whole system of retail brokers and calling clients and taking all those exams. It's just an interesting thing. So people were surprised when I told them how you get into the business. It wasn't through the normal route, which is generally you're a broker and then you become a money manager and you do all these other things. You just go right to the floor of the exchange. So it was a life experience, and that's sort of how I got started. And when I was down there, I met a lot of interesting people, ran into a senior technician who trained me a little bit about technical analysis. And I met all kinds of people. I mean, they were fundamental people. I met astrologers who trade by astrology. I met, people who do spreads, people that were, front-running news, that they would have connections, that they would know news was coming, and they would buy and sell options. And, I became educated on the way the market works just by watching the guys that are trading in the pits, what they think and what they're doing. And one of the things I came up with, along studying with a good friend of mine at the time, was this volume analysis, sort of watching the movement of stocks and so forth. And you get, I came to the conclusion, which is no great insight, but it was apparently since then, volume precedes price. In other words, stocks tend to move when there's more buyers than sellers, or sellers than buyers, depending on the direction, we're talking about. So out of that came the term volume reversal, which is the VR trader. It's the VR trader that you introduced me to, and it sort of became part of this thing where, I follow the volume of the stocks and the options, and it sort of, got me some notoriety, and also gave me a competitive edge, because most analysis, even today, is more price-oriented than volume-oriented. So it's the basic theory of VR, and it all came from my experience down there on the floor. Was you look for big volume changes off tops or bottoms, or even on intraday basis, and you can usually generate some good signals about where a stock or commodity is going, or at least try to trade it in that direction as long as volume is with you. So that's sort of the long-winded background how I sort of got started in the business.
Anybody that you really admire or influenced you to become involved in the financial markets?
Well, I really admired Louis Rukeyser, who had a TV show called Wall Street Week with Louis Rukeyser, who he launched, I think, back in the early 70s. And when I was in college, I used to watch the show. And, one day, this is after I already had been on the exchange. Actually, I had already left the exchange at that point, and I went to work for a retail brokerage firm in Chicago as a research director. They took me off the floor because they figured I could provide some good analysis for their clients and their representatives. I got a call one day from Louis Rukeyser, and says to me, "Would you like to be an elf?" And I said, "What's that?" And they said, "Well, we have these elves on our television show where they call the market, bull, bear, or neutral. And I saw some of your work, and I think you would be, a good addition to the program." So I sort of fell out of my chair. I mean, this is a major guy who's, people who've been around a while know he's one of the leaders in the financial broadcasting field. He's, really started everything with that Wall Street Week TV program. I think it was 1970, 72. This is, before CNBC, before the Financial News Network and all the things that are around today, even before Investors Business Daily or any of the big financial papers. So I said, sure, and then he invited me on the show, and I'm sitting there with all these high-powered Wall Street people, that are so far above me in terms of their connections or money management connections or assets that they manage or influence. And I was just like this little guy, and I had moved out to Arizona just around that time from Chicago. And so I'm this guy living in this house out in Sedona, Arizona, and minding my own business, looking at my horses and my llamas, and doing a little gardening and running my newsletter. And I got Louis Rukeyser, on the phone with me, asking me for where I think the United States stock market or the world stock markets are going up and down. And I'm one of 10 voices of top analysts out there. Like one of the most famous would be Marty Zweig, who had his own Zweig funds, for example, who like light years ahead of me in terms of, the amount of influence and so forth. So, I was sort of on this ego high for a while. So I definitely admire him. I went to dinner with him a couple times. Remarkable man. Just a great inspiration. He wrote all his own copy. He didn't have copywriters. Had a tremendous sense of humor for those who had watched his broadcasts over the years. And he set the tone for financial broadcasting, in the United States and Canada. So I would say he was the one of the greatest that I would admire and say, look at what he's done and look at the influence he had, and the fact that I even had the remote, connection with him is just an unbelievably positive thing in my life.
What's your investing philosophy? What set of principles, beliefs, or experiences drive your decisions?
Well, doing what I'm doing every day and having, been around so many analysts and, technical analysts, contrarian thinkers, cyclic analysts, all these people that I've come to meet over the years, I've learned to put a lot of pieces together. I became very much a cynic about the markets in terms of accepting the news that you're hearing or believing everything you hear or see. And one of the reasons for that is, there's more occasions than not that there's a lot of good news in the markets and everybody loves it. And sure enough, you're at a top or an earnings report comes out and the company's doing great. And that's a stock usually near a high, and it's the time to get out of it, not to get into it. And conversely, when they murder the stocks on really bad news and everybody is panicking and it's down there, it's usually the time to buy. So I've learned that whether it's manipulation of those stocks, which is part of my thinking as well, because I saw some of that when I was a floor trader, that they, sort of manipulate prices to the favor of the crowd on the floor, or whether it's just, natural reaction of people, emotions at the top or the bottom. So I became a bit of a contrarian. And I also ran into a lot of people who do a lot of psychoanalysis that you find out that one of the most famous, and I would say he's an old friend of mine, haven't talked to him in a few years, but Yale Hirsch, for example, who authored in the early 1970s the Stock Trader's Almanac, which says things like, you have a Santa Claus rally, or you have a turkey shoot around Thanksgiving, or there could be what is known as a turnaround Tuesday, where markets tend to change direction on Tuesdays, or we have seasonal influences in the market, like the vernal equinox or the summer solstice and so forth. And it's a very interesting book. You can still buy it, the Stock Trader's Almanac. But anyway, it opened my eyes to there's seasonal and other patterns that occur in the market that you should be aware of, that, things don't necessarily happen arbitrarily, and, there will be impact by these cyclical events in the market on top of the technicals and the emotions and the news and everything else. So over the years, volume is my key indicator, but I put a lot of different items in the soup. You know what I mean? So when I'm buying a stock, is there a lot of good news or bad news? Are the cycles right? Are we in a down or up period in the market? Like, for example, the old expression, sell May, go away. I didn't invent it. It's been around a long time, where if when you're in the April-May period, the market may tend to come down, and maybe it's a good time, not to be in the market. So you put that together with what the stock is doing and what news is doing. And if the volume confirms that, then you have an added ingredient confirming your trade or your investment. So that's what I've come to learn. VRTrader.com, and volume is a key factor for me, but you got to put a lot of pieces into play, the cycles, the emotion, the timing, and so forth, and to come to a conclusion about where the market is headed or not headed. And by doing that, I've been fortunate to have been in the top timing named group in the U.S., not every year, but I think it was 2006 and 2019, I was named top U.S. market timer. And even though I was always on the list, you can't always be in the number one slot. A lot of that was a result of putting all these pieces together, and trying to figure out what's really happening here. So that's, sort of the summary of what I do. And, there's no And I should also say there's, 1,000 ways to make money in the market. I mean, my approach to the market doesn't mean it's the only approach. There's a lot of people that do option spreads and use all other kind of technical tools and so forth, and they're successful. And then there's the people that are just long-term investors, over the last 100 years, even though we had some nasty corrections, if you just stayed long the market and you had a long time frame, you generally were ahead if you could tolerate the volatility. So a little bit of doing nothing has paid off for a lot of people on a long-term horizon without doing all this analysis and research if they can, again, tolerate the volatility like we're seeing right now. So, but then again, that's the way I approach it, Jim.
We'll have more with Mark Leibovit right after this.
Do stock and commodity super cycles, technical analysis, proprietary trading strategies, live mentoring, and an active community of traders excite you? Are you looking for proven trade alerts complete with portfolio allocation, entry price, target, and protective stop levels? Find out why the TechnicalTraders.com is the best source for active traders and investors to learn and earn. Visit www.thetechnicaltraders.com today.
Welcome back. We're speaking with Mark Leibovit. Mark, what's your favorite type of analysis or indicator that you find helps you time your investments?
Well, it would be my volume reversal, the VR, and that's defined as a change of direction accompanied by a change of volume. So, if you're a technical analyst or you're technically oriented and you happen to subscribe to two platforms where you can get your charts. One's called Metastock and one's called TradeStation. These are just platforms where you can, put charts up and you can look at all various indicators. But on those two platforms, you could actually buy my volume reversal indicator. VR is a tool that you can add. It's called an add-on indicator. You could add it to the screen. You pay a little monthly premium for that, but those are the only two places that you can actually see my indicator. So it's not generally available on other platform. So what it is a change of price by a change of volume. So if we're coming off of a top and price is down and volume is exceeding that move compared to the previous trading session, I'm giving you a very general example, that would generally define a negative volume reversal. And I would say, well, there's some smart money selling here off the top, and there's a good chance that we might go lower or maybe go a lot lower. And conversely, we see a bottoming formation. The stock's been down for a while or going sideways, and suddenly we get an uptick on heavy volume coming off of a low, and that would generally, be defined as a positive volume reversal, and that would indicate some smart money is out there picking up this stock or index, thinking there's higher prices. And you can put this indicator on all types of time frames. I have clients, and again, these two platforms that I mentioned, Metastock and TradeStation, allow you to do that, where you can put up a 5-minute chart, 15-minute chart, a 30-minute chart, a daily chart, a weekly chart, a monthly chart, a yearly chart, and you can see these volume patterns shifting in all these time frames. So some people will trade intraday. They'll see a volume reversal in the S&P at 10:30 in the morning, and they're out by 11:30, 12 o'clock after it already made an up or down move. And by the same token, I could see it in the daily chart. And then, this follow through the next day, the day after, and maybe even a lot further. So what I've generally found is you get, follow through after the volume shift. And then, again, not putting all the other pieces together, but just looking purely as a technical analyst at a tool. This has really been my lifesaver over the years, because you don't want to fight the volume trend. If there's more sellers and buyers, you don't want to be buying that stock. If there's more buyers and sellers, then you want to be in it. And you want to have momentum behind you. So you're just trying to, you don't want to be the smartest person on the street. You're just following the tracks in the sand, as they say. And again, the VR, the volume reversal, would be my best answer to your question.
What is something you wish you would have known before you started trading and investing?
Probably I should have been in the movie business or doing something else more fun. There are other little things that I was thinking of doing at the time. I was actually, at the time, I was in broadcasting school at the University of Florida. I saw my future more in communications and maybe even communication law, and maybe even in the film business itself, because I got my younger brother motivated. He ended up doing it instead of me. So if my friend hadn't asked me to go to Chicago, as I mentioned in the earlier part of this interview, and take a flight up there and see what this new exchange was about, I'd probably be doing something like you, Jim. I'd probably be in the broadcasting business or running a TV or radio station or maybe producing documentaries or films or whatever, which is really where I thought I was headed at the time. So I guess looking back, maybe I shouldn't have taken that flight to Chicago. Even though I've enjoyed what I've done and made money, I would have had a whole different life and career and maybe fulfilled my childhood aspirations, which existed up to that flight into Chicago.
What's the best deal you've ever made?
The best deal?
The best deal that stands out in your mind.
Well, I was fortunate enough to have raised some money and taken a small company public many years ago, sort of a tangential project of mine. I took a little public shell, I guess what you would call a blind pool public. They have blind pools now, but they don't call them blind pools anymore. But it was back in the I believe it was in the late 80s, early 90s, and raised some money, and it was like a public shell looking for an acquisition, something where you can put the money to use. And ended up, it was sort of fun too, because I was learning the merger and acquisition business as a sideline, just as an investment. So I ended up creating this public shell, and it ended up merging into what was known at the time as a company by the name of Boots and Coots, which is in the oil fire extinguishing business. Particularly, they were known for the Iraqi fires and putting those out. In fact, there was a famous film with John Wayne called Hellfighters, which characterized picturized that event, that company, and the leading people that were involved in that Boots and Coots company. So I sort of fell into this thing where I had this public show, had some cash in it, and the principals at a brokerage firm knew that I had that. And they said, well, does this company like to go public? And they would do it what is known as a reverse merger, where they don't have to file an initial public offering. They just file into a shell. So I happened to have a shell, and Boots and Coots and I became one, and it became pretty successful. Ultimately, I think it got purchased and taken out by Halliburton, a very big company. So sort of by accident and design, I sort of fell into this because I had no idea when I was doing a little speculative shell, it would end up falling into the hands of a much bigger company that needed access to the public market. So I guess just looking back, it was part of a fun and exciting time, and getting involved in a big name situation, which is, well above the league that I was in. I wasn't in the business of doing this. It just happened that I did one deal, and I was looking to do something interesting as a sideline, and it did make some nice money.
What's something you wish you would have known before you started trading and investing?
Boy, this is a tough one. I wish I had a time machine. Wish I knew where the markets were going way ahead of time, or and so forth. I don't know. That's a tough question. What would I have liked to have known ahead of time? Maybe knowing the long hours and time that the market would take of your life, because the problem with the market is she's a very selfish mistress, as the expression goes, and you have to put a lot of time in the market as a general statement. It's not a casual endeavor. I guess you could be really lucky and just have some common sense and just like a company or a stock because they're selling a lot of products, and just go out and buy it and just go to sleep and you're making a lot of money. But it's a general rule. You got to put a lot of time and effort into it. You've got to do your research, look at a lot of stocks, follow the market. Market doesn't give you a break. There is really no vacation from the stock market unless after like 9/11 when the market closed and you absolutely had no opportunity to trade or do anything. So barring, a market shutdown, you really have no vacation unless you decide that you're just not going to trade or provide your clients with any information, or somebody else could do that in your absence. So it's really a 7-day-a-week, 24-hour type situation, because the market really never sleeps. They say when the market is closed, it's still trading, because there's still people still planning their trades, and now we have 24-hour trading around the world. So if it's closed in the U.S., the stocks could be trading in the Far East. And, of course, trading overnight, not just during normal trading hours. So it's a very compelling, time-consuming business. And unless you just decide you don't want to do it and not be involved in it, it will engulf you and take up a lot of your time, energy, and so forth. But at the same time, if you're asking yourself, are you having fun doing it? And I guess for me, that's been part of the equation. When the bell rings in the morning and the horses come out of the gate, it's a new day. And what are the horses going to do that day? And there's always something new, and there's always something exciting happening in the markets. And there's one thing about the markets, this is probably the closest thing we have in life to a crystal ball, because you see where money is flowing into new technologies, into new areas, and you really see the future. And if you're not really on top of the market, you really don't know what the new trends are, both in products and in technology, because it's being funded and traded accordingly. So in that sense, it's a crystal ball to the future. It's an exciting game with new opportunity, and that sort of offsets all the time and effort that you have to put into it. But it's a bit of a sport, but it's a fun one.
Is that what keeps you interested in trading or the financial trade?
There's a word for it. It's called addiction. It's an addiction. Yes, you have to be addicted to it at a certain level. It's not so casual. I don't think anybody who's in the market isn't somewhat addicted to it on a certain level, because you're watching it all the time. And at night, if you pull out your phone, you can see what the overnight markets are doing. And if some news suddenly hit overnight, then does that change your whole investment strategy for the next day or for the next month? And, I guess the classic thing would be when those planes hit the World Trade Center in 9/11. I mean, did that change everything? And it did. The markets collapsed for a long period of time, and a very short-term event can make, big differences in the markets. So, that's sort of part of it. You gotta be willing to accept that risk of time.
How important is it to have an investment philosophy? Some people like to take risks, others are risk averted or have a real aversion to risk. How important is it to have that philosophy?
It's very important. You have to decide, really what your goals are. You know what I mean? Are you trading? Are you looking just to be passive and just protect your money, in which case you just, buy, treasury bills or certificates of deposit in a bank, or you would just buy, low volatile utilities or bonds and so forth, because bonds can go against you now with rates going up, so you can lose money on your bonds unless they're very short-term maturities. Yes, you have to decide, how you want to play the game. And the stock market is not the only game. I mean, there's the gold market, there's real estate, there's cryptocurrencies now, there's other places, in the banking, of course, I just mentioned. Or there's this cash in the mattress. I mean, cash is a investment decision. That's not necessarily a bad one. Sometimes having just cash in the bank or in your mattress, wherever you want to put it, is not a bad decision. So you have to decide where you are in your, investment, where your sensibilities are. I know a lot of people who just have no interest in any risk. They don't want to see any changes in anything. And, what do? They buy an apartment house and collect rent, and the rental income is it. And they don't care if real estate's up or down, as long as they're getting their rental from their properties, and they're not worried that the stock market is up or down. And, they do stuff like that. So, yeah, you got to decide where, what your comfort level is. And the stock market may not be the best place for you. It could be, like I say, in real estate or just running your own business, and just salting the money away somewhere, is another decision too. So markets are not the only answer. The problem is when you're listening to financial broadcasts, all they really talk about is the stock market, or the bond market, and there are other places for your money. But of course, the brokers got smart about that too, or the investment banks, because they said, well, gee, if you really like real estate, maybe we'll just create an exchange-traded fund that invests in real estate, and let's call it a REIT, an REIT, for example. So we give you an alternative that you don't have to be, you could be in real estate, but we'll call it a stock, and maybe that'll make you feel better. So they do the same thing with gold, and they do the same thing now with cryptocurrencies, and they create these vehicles that you could trade but they still offer volatility. So again, you have to decide if the volatility is your cup of tea.
Do you have any recommended reading for people interested in investing?
Well, let's see. What would I do? I would start with when Bill O'Neill launched Investors Business Daily in 1984. I was actually sitting next to him on a TV interview back in Chicago, and he was launching it back then. I actually became the first advertiser for my newsletter back in 1984. Nobody else was advertising it because nobody knew about Investors Business Daily. But I like that paper. It's a terrific research paper. They have a technical approach to the market. They have some great videos and reports that come out every day. It's not the Wall Street Journal, it's not Barron's, it's not CNBC, but they still do a great job. And I would say reading, there's a lot of stuff there in the Investors Business Daily publication, but also in their research and their videos. And I would say that's a great place to go. And I haven't talked to Bill O'Neill since that day in 1984, and he probably doesn't even remember who I am. But I remember when he was launching it, and it really was a terrific research tool. A lot of people have made a lot of money just following, the research from that. And if I had to give out one idea, that would be it. And a second tangential one is one I referred to earlier in the interview, where there's a publication, it's actually a little magazine that comes out every year called the Stock Traders Almanac. And this was the first book or if you can call it a book, it's like a little manual that I've ever read in the stock market. And it was Yale Hirsch who created it. I think he's about 95 years old now, if I'm not mistaken, and he's still doing okay. But this is the publication that I refer to that gives you the cycles in the market and what markets tend to do different times of year, and days and hours. And that's what I called it, the Almanac. And so I first picked a copy up in the early 1970s, and I really thought it was, so it was actually the first. I think it might have been the first book. This is even before I ended up going to Chicago and being a floor trader. It's the first book I ever read on the stock market. It's not like I say a book; it's like a calendar that gives you all the various things that are happening different days and months and so forth in the market. So I would recommend that. But I'm also mentioning that from a selfish point of view because I'm just remembering now that I did start reading it or obtaining copies in the early 1970s, and I think it was 1987 that Yale's edition of the Stock Traders Almanac came out, and he found out about me one way or another, and he actually dedicated that book that year, the 1987 edition of the Stock Traders Almanac, to me. And I think he named a couple other technicians in there as well, and he called me the new prognosticator. And, if you think about it, at the time, I was like, coming out of college. This is, we're talking the early 1970s, and I read this book, and it was interesting in the stock market. And about 15 years later, the guy that created it, Yale Hirsch, decides that the work that I had done since, obviously, I guess I was on the floor, and I met Louis Rukeyser, and all this other cool stuff had happened, that I was important enough that he wanted to dedicate the 1987 edition to me and several other people. So in a way, I'm a little prejudiced at mentioning the publication, but it was an influence on me and getting me interested in even looking at the markets. So I would say, besides Investors Business Daily, I would get a copy of that Stock Traders Almanac.
Before we go, what topic or financial or business practice are you really passionate about?
I guess trying to find new opportunities in the market, trying to beat the crowd and be ahead of others and make money doing it, because that's what I'm doing. I'm in the money. I'm in the money business. I'm in the educational research business. You're trying to find new and exciting ideas. So I'm always trying to find a new opportunity. One that I was given a lot of credit for was, for example, in 2014. A lot of volume came into some of the cannabis stocks, which were new in Canada at the time, like Weed, WEED, which later became Canopy Growth. And I saw that coming, and I became widely recognized afterwards for being one of the early people to identify that as an investment opportunity. In fact, Weed went from like $1 to $55 in the 3 or 4 years following the fact that I brought it to people's attention. So that sort of, stuff like that encourages you for example, Tesla, which is one of my big, research recommendations. I got in very early on it, and there's a lot of accolades that came my way that, went up 10 times after I had made mention of it to people, because I saw it as both a new frontier, but also technically as a stock that, would probably do very well in the future. So, getting accolades for some great calls, I guess, inspires you to want to look for more, and there's always going to be more. That's it. The market, no matter what you might think or how bad things might be or what news events might be around, the market always seems to eventually come back, and that's been the story, going back to from 1776 when they say under the buttonwood tree, and when the New York Stock Exchange was formed, and the 200 and plus years. Look at all the volatility, but the market has been up, and there's always new ideas and new stocks and new opportunities, and whether it's cannabis or Tesla or biotech stocks or energy or solar stocks. There's always something developing out there. That's why I referred to earlier as the market being the best substitute for a crystal ball, because it really does open opportunities. So, if you just want a 9-to-5 job and that's all you're excited about doing, and that makes your day, that's fine. I guess I'm looking for a little bit more excitement. I like the idea that I found the Tesla, I found the cannabis stock, or I found a situation like this Boots and Coots that I had mentioned to you before that went public because we got in early and was able to, put together a little deal. It just, the adrenaline is running, and it's fun, and, it's a sport too. I mean, this is, it's a game, it's a sport, it's an investment, business, but, it keeps me going, Jim. I tell you. I mean, when the market opens, I can't wait to see what's happening. In the middle of the night, if I get up, I'm looking at what the futures markets are doing, and that's why I answered you a little while back as being an addict. I mean, I'm addicted to the markets, and it's, it makes my day, it keeps me going, and it's an exciting game.
Mark, thank you so much for being on the Technical Traders Podcast.
Thanks for having me. Pleasure to be here.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR Newsletters, also known as VRTrader.com. I'm Jim Gandhi.
Thanks for joining us this week on the Technical Traders Podcast. If you found value in our show, subscribe and give us a rating or share it with a friend. That would be greatly appreciated as well. TheTechnicalTraders.com, your source for technically proven strategies to make more money with less risk, so you can take your trading to the next level. Comments made on the Technical Traders Podcast are an expression of opinion only and should not be construed as investment advice or recommendations to buy or sell any financial instrument. This information is for general information and educational purposes only. Guests on the show are not compensated for their participation. To view our full disclaimer, please visit our website at www.thetechnicaltraders.com.